we will wait for people to load. But yeah, I'll finish telling Anna and Mary the story. So I was turning a horse out and she bolted and I had a hold of the lead rope and you're not supposed to like wrap it around your hand, which I did, and it was just looped. But when she bolted, it closed on my hand quickly and it dislocated and broke my pinky. And I don't have time to do anything about it. So it doesn't hurt, but it will not. This is as straight as we get.
Oh, it hurt. I'm surprised it doesn't hurt.
Yeah. It did then. It was like dislocated, like I had to pull on it.
Oof.
So good times. Hi everyone. You didn't join the wrong episode. We were finishing a backstage conversation, but we'll get started in just a minute, giving um, people the opportunity to join. So I'm getting text messages, worried about my golf game. So actually, I only didn't golf for 1 week after it happened, and it actually has helped my golf swing because I hold the club lighter. So Felix, don't worry about the golf game. It's still there. I had a personal best on Sunday, so I'm super excited about my golf game right now. Oh my goodness. All right, these guys are out of control. Let's get started before we get in trouble. So, welcome everyone to the SIP, where conversation sparks connection, collaboration fuels progress, and industry leaders come together to share ideas, tackle challenges, and inspire change. Think of it like your favorite cup of coffee, catching up with a friend. It's casual, it's energizing, and it's packed with insights that move us forward. At TMC, we are all about creating that space for innovation, growth, and meaningful impact. And today's episode is no exception. We're driving into the real world strategies, success stories, and the kind of dialogue that reminds us why our community matters. So, thank you all for carving out the time to join us today. Today's episode is proudly sponsored by Dovenmuehle. I will refer to it as DMI most of the time, but it's one of TMC's longest standing partners and one of the oldest and largest mortgage subservicing companies in the US, specializing in private label servicing for lenders. Founded in 1844, DMI has been a cornerstone in the mortgage industry for nearly 2 centuries. That is really hard to believe in today's world and environment. And joining me today are two powerhouse guests, Anna Crow and Mary Luthhauser. Anna is the SVP and Director of Business Development, and Mary is the AVP of Mortgage Operations of Americu, an institution with deep roots of its own, founded in 1955. Together, they bring decades of experience and a wealth of expertise and operations servicing and the evolving needs of lenders. So pour yourself a cup, settle in, and let's get started. So welcome to you both. How are you?
Good. Good. Thanks for having us.
So I was going through my dialogue and I didn't notice, but Mary, I have to ask, a Christmas tree mug on November the 4th?
Yeah,
We're
we're past
51 days
Halloween.
out from Christmas. We haven't even carved the turkey yet.
Yep, we're past Halloween, so we can dive right in.
Is your tree up?
Yes, big trees up and then little decorations I can sneak out without my husband seeing them all at once.
Yeah. So we did a prep call yesterday and Mary had her Christmas tree mug. So I quickly ran to the kitchen and this is the only resemblance of Christmas related mug that I had. So I'm sipping it's very complicated here. I have the sunflower LaCroix water in my Christmas tree or my Christmas themed horse mug. So very confused.
Yeah,
So
I
Mary,
checked.
what'd you say, Anna? Sorry.
Oh, I said I checked my mug stash, and unfortunately, I only have Christmas themed wine glasses. So
Well, that
like
would
this.
have been perfectly fitting. We do not regulate what you sip on this show. We'll expect that. We'll expect that in the coming months from you. But so Mary, besides being the premature elf, tell us a little bit about Americu, your role, and what you're most passionate about when it comes to mortgage lending.
Sure. So I am the AVP of Mortgage Operations here at Americu. So I oversee the fulfillment area of the loan section here. So I call that the meat and potatoes of the mortgage process. So I oversee the processing and closing funding areas. With that comes our construction servicing as well. So I do manage the servicing partnership with DMI at Americu. So I am most passionate, I guess you could say, about process here within the mortgage experience. So I want to make sure, although there's so many different facets of the meat and potatoes section of the process. So your processing, your closing, your post-close, your QC. I want to make sure our members have a seamless experience, that they see it as one smooth process. So with all of those little hands in the pot, I want to make sure that that's one smooth experience. So my passion is just making sure that our members feel well connected to the process. They feel well connected to staff. So it's a little bit about me.
I want to clarify for the listeners. So Mary is talking about the members of the credit union, not the
Oh, yes.
members of the mortgage collaborative. We definitely welcome any help that you want to offer for our members in making a smooth process, but want to create that differentiation for those non-credit union members who may not have been following. So, Anna, are you a jingle junkie or a procrastinating prancer when it comes to the holidays?
I am under strict rules for my husband to not put up a Christmas tree until Thanksgiving is over. If it were up to me, it would probably be up soon.
I like the way he rolls. So, give give us the scoop on Dovenmuehle and your role there.
Yeah. So yeah, I'm so Dovenmuehle, you gave a great background. You know, we're one of the leading sub-services in the nation, working with close to 280 plus clients across all different types. We work with IMBs, we work with credit unions like Mary, banks, housing authorities, institutional investors as well. I'm responsible for new client relationships and essentially adding to that list of clients. I'm out on the road a lot, at a lot of conferences, particularly this season. Out forming new relationships, seeing existing clients, and I'm also responsible for our strategy in the market and how we go to market, ways that we can improve our offerings. I'm very close to our product development as well, so that we can continue to offer great solutions to our lenders and, by extension, their borrowers, and for the credit unions, the members.
Awesome. And Mary, let's talk shop and kind of dive into some of those solutions. Can you walk us through the DMI solutions that you use and why you chose DMI as your servicing partner?
Absolutely. So DMI, they service all of our portfolio mortgages. So they also they do the interim servicing for any mortgages that we sell on the secondary market. So once that mortgage closes and it's ready to board, it goes right over to DMI. They also pick up the servicing once our construction loans go into permanent financing as well after the interest only period. We decided to go with the sub-servicer about 4 years ago. We had done all of our servicing in-house previously. That was actually my first role here at the credit union, was a servicer. We had a small team of 3 and a very large portfolio of loans. I think it was around 9,000 or so. So as you can imagine, that's a lot of phone calls for 3 people to handle, a lot of escrow analysis to run. So that was really a big part of engaging in a sub-servicer to help, again, create a smooth experience for our borrowers post-close.
Awesome. And anything that Mary didn't mention that you would like to give some color on, maybe some of the additional products that you offer and any information around tech stack and what
Yeah.
is new around AI?
Yeah, absolutely. I think Mary and I had talked about this, and she would agree. And not to put words in your mouth, but deciding to engage with a subservicer, also not necessarily a product, but risk management, and being able to shift that risk over to a subservicer who is all we do is subservicing. We have our compliance team is made up of 19 board attorneys, and they are just tracking and monitoring every single regulatory rule and compliance requirement that's being rolled out. With the CFPB being pulled back, it actually creates a lot of complexity because then we have a lot of the states coming in. So just that landscape is incredibly complex, and so I think that's a big reason why a lot of our lender clients shift over to a subservicer, so that risk mitigation, because it's only getting more and more complex. And another thing, as you touched on technology, we develop all of our own technology. It's proprietary to Dovermuehle. So anything that is facing the borrowers, websites, mobile apps, and all the bells and whistles that come with that, and self-service and features, as well as anything that's facing to our clients' applications, reporting, dashboards, anything that they need to manage their portfolio, as well as manage the oversight of Dovermuehle, we're actually controlling that technology. And so from Mary's perspective, they now don't need to create a website. They don't need to keep it compliant. They don't need to have this roadmap from a technology standpoint that they now need to pay for. And they're just partnering with us, and we're able to do all that for them, and also in their name. So it looks and feels like if it is an Americu website, but really we're managing it, keeping it compliant, and making it the best in the business.
Yeah, and I also think that that's huge when our lenders look at retention, that, it is constantly them, a constant reminder by white labeling the servicing solution so that they can take advantage of that from a retention perspective. So at the Mortgage Collaborative, one of our core values is that we're for the members, by the members. Lenders are the driving force behind all the initiatives. And also through our Pulse of the Network surveys, we identify a major gap. We identified a major gap in construction lending, and that is all the way from origination. And now I hear we can also have a little help on the servicing side. But Mary Americu is active in construction lending, and I know you've overseen that area. Why is construction lending important to the organization, to all organizations when they look from a product perspective? And why does having the right servicing partner matter when it comes to construction loans?
Yeah, I think construction lending is extremely important to, every organization, simply because I think, it adds just another product to your toolkit, right? There's another option for members, especially we've seen in the last few years, shortages in inventory, less and less homes available for people, but more land available for people to build on. So I think it's a huge area for credit unions, banks to dive into, lending wise. And I think just having that option for people, you don't have to turn them away. You don't have to refer them outside of your market. Um, Servicing wise, there's a lot involved with servicing. You're not just ending that at post close. So you're taking the member through that whole build period. It's almost like they're processing 2.0. There's the inspections involved, there's the disbursements to that involved, there's the tracking involved. So it's a whole other relationship when it comes to the servicing piece. So either having the infrastructure internally to service that loan, or having a partner like DMI who can help with that servicing, is instrumental in being able to offer constructions.
Yeah, I think one of the positions I've most envied was one of the lenders that I consulted with over the years, and they had a huge construction team, and that construction team constantly on the phone with the draw process and disbursements. And I thought, oh my word, like I can't imagine anything worse than trying to control that chaos. I think origination is chaotic enough, and then you throw that construction complexity in there, and it's mind blowing. But Anna, what challenges are you helping lenders solve when it comes to construction lending and servicing?
We have a really growing construction portfolio right now, just because of the interest in the market. And I'm at a conference actually right now, and was talking to a few lenders last night, and so many people were showing a lot of interest in getting into construction. So it's just going to grow. And with that, as you're thinking about starting to originate construction loans, as Mary had said, you have 12 months at least of a build period where the servicing is really intense. And so, particularly for lenders that may have already outsourced their servicing. Now, if you've working with a subservicer already and you want to start doing construction loans, you've probably really reduced your servicing team in-house. You're probably directing all of your, borrower calls over to your subservicer. You don't have a print vendor to be able to print statements, which is required from a compliance standpoint, collect payments, things like that. So, working with a subservicer really makes a lot of sense. It's a long period of time. So don't forget that, while you might be underwriting the loan to sell off to the agencies, you need to work with it for at least 12 months. And the servicing is really intense with the inspections, the draw management. DMI, we have, dedicated customer service channels as well as we have dedicated phone queues that go to customer service representatives that are trained. They're part of our construction team, dedicated emails and self-service tools on the websites that can be able to help. But it is a very collaborative process with the client, just, with the functionality of the drawers and the inspections, there's a lot of moving parts, but we're able to take a lot of that off of our clients' plates.
And when does a loan come over to you as the servicer in construction? So if I'm doing a one-time close construction, it's the initial close before any building starts. Is that when the interaction starts with the servicer?
It's as soon
Okay.
as the loan closes. Yeah. It will
Okay.
come from your LOS straight over to us, and we'll begin servicing it day one.
Yeah, that is a long, tedious process that I don't recommend anyone goes alone. So it definitely would want to make sure that someone with more expertise than I had was taking care of that process. So, but Mary, beyond construction, what are your top initiatives heading into 2026 as we start to close out, hard to believe, 2025 and start doing our strategic planning for 2026? What are you all looking at? And it doesn't have to be directly around servicing.
Yeah, so we are looking at really expanding some of our programming. So we just implemented a land loan to complement our construction program. So we're looking at different options there. We also are really looking at our existing tech stack to see, now that we've built that foundation with our tech stack in the last couple years, what else can we do with it? So we overhauled our technology in 2023. So now that we've done that, we've gone from what I call the mortgage dark ages to present times with our technology. So we've built that foundation. We've got everybody used to it. So now we want to see what can we do staffing wise to really bolster those for us. I know AI is a big buzzword for people, but we want to see what are the automations we can build and everything to make the process smoother for our staff, smoother for our borrowers. So really that exploration piece is our biggest initiative for 2026.
I posted yesterday on LinkedIn. I don't know if you saw it, but I've seen just from having, kind of knowing what's going on in the industry, we have seen lenders where they have been very focused on their front end technology, consumer experience. Um, I kind of lump the loan officer experience in the beginning phases in with that, but so much focus has been on that, and they're quietly shifting to back end processes. And it gives me uh, the thought that some lenders weren't working towards sustainable outcomes for when we have a refi boomlet, any type of increased production. I don't feel like we as an industry, that's something that we have been as focused on as we should have. And I think a little people are having that oh crap moment, that what if production increases 20% in Q1, am I going to be able to handle the volume without having to hire back and have the accordion effect that I said I never would again? So,
Yeah, I think that's a big part of it is just we've learned from the lessons of the previous refi boom. So it's, not pressing repeat on those and just staffing up, but what can our systems do for us too?
yeah, awesome. And that seems to be the theme around, like, I listened to the technology working group from yesterday and have, set in on the operating working groups and the owner operator groups. And many people are having similar discussions around verification services, AI underwriting solutions. We still are talking about data extraction and dot classification, which really blows my mind, but that's where we're at. And so we need to face it head on and do something today about it as opposed to continue to wait. And then, sorry about that. With the natural disasters on the rise, and you talked a little bit about regulatory uncertainty, the delinquency upticks, and rate volatility. How is DMI helping lenders navigate very complex environment and landscape today?
Yeah. Well, just to touch on the delinquency, kind of a recap of what we've seen with the DMI portfolio this year. Early in Q1, we had seen an improvement after a weaker Q4 in 2024, and then we did see a gradual increase in delinquencies mid-year. So from Q2 to Q3, we saw delinquencies rise slightly month over month, and as you had said, this definitely was driven by higher taxes and insurance, and more unemployment-related forbearance requests. So we did see a peak. We've had a strong October performance, probably our best month of the year for delinquency, and that's really thanks to very effective loss mitigations and different deferral solutions that we're able to do. But with that said, we're very cautious for an outlook for the year end, right? So we do expect delinquencies to rise again in November and December, as they usually do, due to the seasons. So with all that said, just being a bit bearish on where things are going, in order to help our lenders when it comes to rising insurance costs and delinquencies and things like that, so that we can help our lenders, we first have to help the borrowers, right? We need to give the borrowers every tool in their toolkit to be able to make payments, to self-serve. So creating that digital borrower with effective websites, mobile apps, and on the underlying side of that, using AI to streamline those inquiries, make sure that they are responded to very quickly. Any inquiries that borrowers have, related to anything with insurance and disasters, we have a portal that a borrower can essentially manage the entire loss draft process or claim through the entire thing with a single point of contact, a lot of transparency. And then from a collection standpoint, being omnichannel, being able to reach out to borrowers to via text, websites, diversified forms of outreach, being very creative with making sure that we're protecting our lenders' assets by getting in front of those borrowers from a collection standpoint. And so, yeah, that's, we have to help the borrowers in order to help the lenders. And that's what, we're really focused on, especially as we see delinquencies uptick.
Yeah, I can't imagine those conversations, both from if there is a natural disaster and trying to, replace the home or have work done on the home, that conversation. But probably even more complicated is homeowners insurance costs doubling or losing coverage in particular areas. And then because if you're the one collecting the payment through escrows, it's your fault. Like you can explain however you want to, but to the consumer, somehow it's your responsibility, your fault for not watching out. So,
Yeah.
those are trying
Yeah.
conversations.
Yeah, and analyzing our data recently around forced place insurance, taking a look at it since 2021, we were just looking at the data recently with obviously an uptick in forced place insurance policies, and it's very evident. Just it's happening nationally, not even to certain states that we would think would be obvious. It's across the board.
And then you recently rolled out an AI-driven secure messaging to enhance the borrower's communication. What else is on DMI's roadmap for 2026?
Yeah, we have a full roadmap, and I think it can be summarized just with one word, which is data. And everything is going to be data driven. And I think, in a few different ways. One, making data more accessible to our lenders. So accessibility of data, going beyond flat files, giving data very accessibly to our lenders so that they can do what they want with it. But then also providing useful data. Data that lenders can act on. And you had touched on that earlier with recapture. So, it's recapture, it's retention, and it's cross-sell. So we have a lot of solutions today, and we have a lot of upcoming strategies that we're going to be rolling out. And it really to be able to attack across the whole loan life cycle of a borrower. You have a life cycle of a borrower where you can have something as late as letting your lenders know that a payoff statement has been generated. Now, I mean, that's still helpful, but it's really late in the game. And there's a lot of data out there that you can leverage as it relates to propensity models and behavioral analytics that you're able to really get in front of borrowers earlier on in the cycle based on this data. So exciting stuff that's out there, and just across the whole life cycle. Recapture, retention, cross-sell is definitely where everyone is focused and using data smartly.
And that proactive take on data, not the reactive, to your point, is so important. So, as we start to wrap up, I wrapped up travels coming back for work for the rest of the year, coming back from MBA annual. Anna, I know you're on the road. Mary, are you done for the year, or do you still have some travels?
I have one more for our Tri-State Cure So Credit Union Real Estate Network fall meeting next week in Long Island City. So we're excited for that, but that's my last one for the year.
And
Yeah,
Anna, you'll be there too?
yeah, Mary and I are going to be on another panel together next week. So
All right,
this is
awesome.
the prep for that.
Yeah, well, make sure that anybody that's listening that is attending, make sure that you support Mary and Anna in their panel and make sure that you show up for them. And then Anna, are you done? Or are you still on the road? Do you have more
Um,
trips?
Luckily for me, I have a twofer next week. I go to the Tri-State Curin, and then I do attend the IMN MSR conference where I'll be on another panel. So it's been a busy few weeks.
Right, awesome. Well, safe travels to you. That's a wrap on today's episode of The SIP, sponsored by Dovenmuehle. Mary and Anna, thank you both so much for your insights and being a part of an impactful conversation. And to our audience, thank you all as well. Thank you for the chats. Thank you for the text messages that I have received. So I just want to say that whether you are a premature elf like Mary, a jingle junkie, a procrastinating prancer, or a Yuletide snoozer, we want to see you all in Scottsdale in just 111 days until Desert Disruption Conference, February 22nd through the 24th. Get registered. We still are running early bird registration for our lender members through December 22nd. We don't want you to have FOMO, so get there. We'll see you next week for all of our members at 2 p.m. Eastern on Tuesday, November the 11th on the SIP. And for the broader industry audience, we'll see you at 4 p.m. on LinkedIn. So cheers, and we'll see you all next time on the SIP.
Wonderful. Thank
Thank
you.
you.